Hi, and welcome back again to Tim Bigham's Big Time Options, Edges, and Hedges, taking a look, a deeper dive, if you will, on the three big reasons why CAR, Avis Budget, is still looking like a short. Our last video, we talked about our latest trade where we sold a January of 2028, well out of the money, sell strangle, the 380 calls and 120 puts, got $100 for it. So basically, break even at 480 and at 20 bucks. And then we're able to add a hedge shorter term, actually the April 17th that expires this Friday, able to sell the 200 190 put spread for a little bit over a buck. Can do that every week until January of 2028, until the insanity gets a little more sane. So we'll go through how we're hedging our long-term strangle and why we think that it's absolutely time to take a guarded short position on CAR. So let's jump in and take a look. First, here's the original trade going back to last week. As I said, selling the 380 call 120 put that expires January of 2028 for $100. So the break even 480 to the upside, 20 to the downside. So at the time, had over 100 points of upside cushion, right? And had plenty of downside cushion as well. You can see sell-in IV over 75, and that's going out to 2028. The highest IV, as we'll see in a second. We always like to take a look at a approach here using a fusion approach, right? So we always like to look at the fundamental, technical, and IV analysis. So the fundamental analysis took a look at Hertz, right, which is the major competitor to Avis-Budget. Both are the big car rental companies, right? So I pulled a 3-year comparative chart, right? We have seen a couple previous short squeezes in Avis-Budget that certainly got extended and then failed. Here, as you can see, going back, normally fairly well correlated, but here was the first short squeeze. Got to 40% outperformance by Avis-Budget over Hertz before all of a sudden Avis-Budget reverted in a big way. Last time, right, last summer, we saw it get to 65%, where CAR outperformed Hertz ATZ by almost 70%, just in the mid 60s before again Avis-Budget absolutely took a nosedive. The short squeezes always fails. We know how this ends, right? Now we're taking a look at the comparative difference getting to 125%. All of it basically for the most part since March when we saw a car trading at 100. Now it's at 300, right? We're seeing Hertz up slightly, but we're seeing car basically up 200% over the past month or so, all because of the short squeeze. They had bad earnings, right? We'll take a look at the revenue numbers here in a second, but we can see this is by far the biggest differential over the past 3 years, right? The previous two times it ended badly for CAR. You can see here on a comparative basis, market cap of Hertz just under $2 billion, right? In the last 12 months, Hertz had revenue of $8.5 billion, had a losing earnings, right? You can see CAR now has a market cap of over $10.5 billion compared to under $2 billion for Hertz, right? But the revenues aren't that much more, of a big deal, right? CAR had revenue of 11.65 billion, lost a huge amount of money, right? We can see CAR, right, the last 12 months had 8.5 billion. So yeah, Avis-Budget had more, but not by that much. You can see on a comparative basis, pulled it off here, right? The market cap of Hertz just under 2 billion. CAR right now 10.6 billion, right? You can see that, we're looking at, huge differentials here, right? 0.63 versus 4.38, right? So in other words, Hertz versus CAR, the market cap of CAR is 8.63 billion more than Hertz, or over 4 times, almost 4.5 times the market cap, even though the revenues are only 37% more. That makes the price to sales differential massive, right? Hertz trading at basically a 0.2 price to sales, Car trading at by far the highest price to sales we've seen over the past 3 years at 0.9. So here's Car's price to sales ratio. Use this because price earnings, as we said last quarter, and many past quarters, they've lost gobs of money, right? But price to sales on Car now at by far the highest level over the past 3 years. Hertz chugging along at basically the lowest level. So certainly on a comparative fundamental basis, right? Car is getting overextended, getting very rich to its own valuation multiples, and also on that comparative basis, as we said, where it is far outperforming Hertz in a huge way. Previous 2 times ended very badly. We can also take a look at the technicals, as we always like to do. Here you can see the chart on Avis-Budget Car having struggles at the 300 level. Friday it actually was down most of the day, rallied into the bell to close up, so it has been up basically every day but one since bottoming out at 100. You can see last earnings, the stock got tomahawked. Once it kind of broke out, we're seeing the stock just rip to the upside. 9-day RSI, by far the highest level over the past 12 months, right? But starting to slow down a little, right? The price action starting to slow. We can see MACD again at the most extreme, right? So things getting very frothy, no doubt. And you can see Bollinger percent P, which is implied volatility based because of that huge spike in IV that we'll take a look at in a second. Bollinger percent B also weakening. Here's a generalized implied volatility just going to by far the highest level. That means option prices are ridiculously high, right? But finally starting to soften. And let's take a deeper look at that implied volatility. As we can see, it's finally maybe starting to revert. Here's the 120-day IV. You can see that just absolutely parabolic move, but finally starting to soften on Friday, right? We're actually seeing from Thursday to Friday, right? Thursday in red, Friday in green. IV coming down here. You can see the short end still at a huge premium to the back end, so that skew at the term structure of vol, right, at a huge premium short term, which allows us, we'll take a look at the hedge our position by selling short term put spreads against our long term sell strangle, right? You can see here IV reached 172 on a generalized basis before finally softening Friday to just 158. Just 20 days ago, it was 100 vol points lower, so certainly a massive move higher. Here you can see Friday's action. We're finally seeing IV start to soften. Here is a 360-day 40 delta call IV. You can see over the past 3 years, the previous 2 times, the highs were met with a reversion. Now we're seeing just a huge, massive moonshot, right? Finally starting to come down. Taking a shorter look at it here, you can see it was trudging along till we saw that unusual option activity we talked about, and finally starting to revert on the long end. We're also seeing it on the short end revert as well, which gives us the ability to hedge that position, as we said, by selling a short-term put spread. So our kind of new trade here is simply going out and selling a shorter term put spread to hedge our longer term sell strangle. So this was from Friday, sold the April 200 190 put spread, right, for $1.10, getting almost a 200 IV on that with the stock at 278. Stock actually closed basically just under 300, so the put spread's working out already. But as you can see, every week there are options, so you can continue to sell that put spread against the long-term sell strangle. No harm in that. If the stock comes down to 190, the trade overall will be doing just famously well, right? And you'll probably see a reversion of IV. So able, in essence, to sell this ridiculous run-up in price that is getting to extremes here. Able to sell, as we said, that IV that is finally showing some sign of reversion, right? Able to sell it at levels we have not seen in a long while, and able to hedge it, right, by selling shorter term put spreads against it at even a higher IV. So I think overall, with the fundamentals getting to extremes, right, looking at the fundamentals where you're seeing Hertz versus Avis-Budget, right? Hertz trading at a 0.2 price of sales. Avis-Budget at the highest over the past 3 years. You can see again that the valuation multiple is getting to extreme. So fundamentals certainly pointing to a reversion sometime soon, as we said on that comparative basis. The previous 2 times it even got close to the 125% differential now, right? It reverted very quickly, so we're able to sell it up here. Just look for a small reversion back is all we need, right? Certainly on a technical basis, the stock, no doubt, getting overbought on every valuation metric. And then on an IV basis, as we said, that IV getting to an extreme, certainly, as you can see, just looking for it to revert back somewhere along here. So able to sell shorter term put spreads, I guess our longer term sell strangle. So selling January of 2028, 380 calls, 120 puts was the initial trade. You can even get further out now. They added more strikes. And then if wants, you can hedge by selling shorter term. We did the weeklies, the out of the money put spreads at very high levels, simply because, as we said, that IV has gotten to massive extremes on the short end, almost a 200 IV here. So hopefully provide some insight how we go about identifying trade opportunities. But as we always say, you never know what the market is going to do. And from a simple standpoint, here is why you don't want to get too crazy with this trade. Here's a 5-year chart on Avis-Budget. You can see that 300 level has been met several times with big time reversion, but the one time on the short squeeze that failed intraday, it actually traded up to 535. So you got to be able to hang with the trade intraday without getting worried, right? So position size accordingly. But at the end of the day, right, we always think we know this ends badly, right? We know this will absolutely end in a bad way. So going as far out in time as we can with our sell strangle, hedging shorter term as we can to take advantage of that hugely inflated IV. Short term even to further hedge the trade makes a lot of sense. But as always, trading is about probability, not certainty. So position size accordingly. Make sure you can stomach a more insane move, right? There's nothing to say that car can't trade back up to 500, but by selling that 380, 120 sell strangle at $100, right, you're good to go at least till 480. So until next time, as always, here's the good trading. Take care.